I am Kristin Clark. I am a managing broker here at Compass, and today I'm in the Fremont Compass office with Lysa Griffith. She is a senior vice president of Origin Point, very, very experienced, 25 years in her industry, and knows the financial market for this industry like the back of her hand. So this is Lysa. Thank you for being here.
You're welcome. Thanks for having me.
Absolutely. Yeah, I know the hot topic right now that's on everyone's minds are interest rates, and that seems to be the bottleneck holding sellers in their current homes and buyers from buying a home. So I'd love to hear what your take is on this and how you're seeing, or what you're counseling people right now in this very volatile time.
Yeah, absolutely. Well, interest rates are starting to come down, which I think is a good sign. They never move up or down in a straight line, so we are seeing some zigzags day to day. But overall, I do think that you're going to see interest rates continue to trend downward. And we've got a lot of tools in our toolbox that can help bridge the gap for buyers looking to buy and wanting to keep their payment and their interest rate low.
Okay, so like if it's not, they don't have to wait for that magic moment where to lock in. I think everybody's just on this high, like ultra alert, like when do we lock our rate in? And
yes.
So how do we tell people when that moment is, or what are those tools that they should consider as a different alternative?
Okay, two questions in one. So I think locking always depends on how long your close date is out. Like if you are closing in the near term, you want to probably lock to protect against day-to-day volatility. But if you've got 45 or 60 days, I probably wouldn't be in a hurry to lock, because I do think you'll see interest rates continue to trend downward. Mm-hmm. We do a lot of different things right now, and I have been in the business a long time, as you mentioned. We did a lot of 2-1 buy downs back in 2010 and 2011, and we're doing a lot of them now. Okay. They really are my favorite program. We can do them on a jumbo or on a conforming loan. Mm-hmm. And essentially how they work is they do need to be funded by a seller credit towards closing costs, but they buy a buyer's interest rate down 2% for the first year, 1% for the second year, and then it would convert to the regular note rate on year 3. For example, if you locked at 6% today, you'd be at 4% for the first year, 5% for the second year, and then you would go to the regular note rate of 6% on year 3. The super cool thing about them, though, is in addition to keeping your interest rate and your payments low, we do think interest rates will continue to come down. And if that buyer refinances out of that mortgage in the first 24 months, they're going to have leftover seller credit, and they don't lose that. That gets applied towards their principal as a principal reduction. So it's a great tool to help someone get into their home now, but keep that interest rate and payment low.
I love that, and that's powerful, and I don't feel like many people know that. I mean, you don't hear buyers or sellers talking about offering a buyer credit buy down for the loan. You know, I think everybody's so wrapped up in what they get for the final sold price, and they're selling themselves short because in reality, it's probably pretty similar, right? The net proceeds?
Actually, net proceeds to the seller, yes, but a buy down is much more impactful for a buyer. Mm-hmm. We did a scenario if a buyer was to purchase a home at $1.875 million and receive a credit for a 2-1 buy down from the seller, the monthly payment would be equivalent as if that buyer had purchased that home for $1.5 million. So pretty dramatic.
That's a huge deal, huge, yeah. So I think we need to get the word out there.
Definitely.
Because I think people are kind of in a gridlock right now, and everybody's waiting, but there's tools and you've got them all. I know you have that, and you've mentioned some others that you can get creative and get where you want to be. You know,
yeah, before it gets competitive. You know, I do think we have an ongoing inventory shortage that is not going to go away anytime soon. We have, a pent up buyer demand. We have all these people that have made application and qualified to purchase a home but haven't yet found that home. Mm-hmm. And as interest rates start to come down, it's going to get very competitive again. Mm-hmm. And if you can get into the house now, maybe pay a little bit less, maybe get a credit towards your closing costs, but still come up with a loan program that meets your needs, I think it can be a huge win-win.
Yeah, so I know that I've been to some of your speeches that you've given, which I love all of them, and I soak them in, but one of them you said something that just really stuck with me. You marry the house and you date the rate. So
Yes.
that's what it's all about. You're marrying this beautiful, lovely house that's yours to keep, and that rate, yeah, it's maybe just a temporary. You break up in a couple years, right? You get a better
Hopefully
one.
less than.
Yeah. That's just, I mean, that's, I think people who aren't in the industry, that just puts it into a very clear visual for them. So it's not, there's so many solutions out there, and I think buyers and sellers alike, there's more ability to move where they want to be, and that'll open up inventory, and that's what we're lacking. So I think it's this catch-22 kind of situation we're in.
Yes, and I think to your point, there's a lot more mortgage products than people realize. When rates were at 2.5% or 3%, everyone was doing a 30-year fixed mortgage, and it was, you know, fairly in the box. We're seeing the return of adjustable rate mortgages. We're doing a lot of both temporary and permanent rate buy downs. A lot of people do want to buy before they sell, so we have some departing residence programs that we can combine with a home equity line of credit to access some of their equity for down payment, but then not need to count that house payment against them if we know they're going to sell, and that can help them get to a higher purchase price on the new house before they sell the old house.
That's very, very important, and I think there's still some negotiation room for getting more house for your money, even though there is a lot of buyer demand. But back to your point with the seller, you know, if they can move up, and it's not just about waiting for the rates to drop because they're locked in a really good rate right now, that's a good solution, because then later they can, when the rates return to a more normal level, I mean, they'll probably never be back at the 3s, do you think?
I hope not. I think we'd have some bigger problems than that. I mean, I do think you're going to see us return to pre-pandemic levels. So I easily think we could be in, you know, the mid 4s, high 4s.
It's not bad.
Probably not 3s, but
Yeah.
we'll see.
Yeah.
My crystal ball doesn't work so well.
So like when I have people saying, hey, I don't like this house too much. I'm at a 3% rate right now. I don't feel like I should move. The answer, I mean, we could encourage them by, you can get into your dream house, and there's lots of tools in the toolbox that will get you there without overextending your payment or your lifestyle.
Exactly. And you know, you're writing off the mortgage interest up on that first $750,000 of the mortgage anyway, so that does help with the delta as well.
Yeah. Okay, well, this is encouraging, and I so your crystal ball, I keep asking you that. I know you're not a psychic, but where do you mentioned you think we're going to be in the 4s, but when will this be? What's coming up? Like, when will that happen?
May 10th is a big date. You know, when you look at some of the data that the Fed watches in terms of what drives their interest rate decisions, those are always indices that, you know, they look backwards 12 months. So some of the lower readings fall off from a year ago on inflation. So we think May 10th is when you're going to really see that inflation is starting to improve. That should help interest rates. I think, unfortunately, you know, what's happened with Silicon Valley Bank and First Republic, that's created instability in the banking industry, and now the Fed is stepping in to sort of stabilize that, and ultimately I think that will help drive interest rates down.
That's good to know. I think everybody's a little tired of these out of the blue whammies like COVID and Silicon Valley Bank, and let's just have a peaceful existence for a while and get things settled down, shall we?
Sounds good to me. If you can make that happen.
Yeah, let's just make it so. No. But I know, so it's just moving on, just one more question. And
Sure.
I know that you've got kids that are college age and some that are maybe out of college, one out of college.
One out of college.
Yeah, and so I've got two, one almost college-bound boy and one that's in his second year. And I'm just wondering, what's the future like for our kids? Like, what are you telling your kids right now about housing, and should you buy a house?
Yeah.
Or should you be renting? I think I know the answer because I'm an agent and I advocate home purchasing creates financial wealth, but what are you seeing with the rate and all the volatility?
Yeah, absolutely. So I do have a daughter, an adult daughter, who has her own job, and I'm encouraging her to buy as well. I think right now there's an opportunity for buyers in the market, especially for first-time home buyers, because when things were really crazy a year ago, first-time home buyers tend to have less down payment. Well, their offer would get passed over for someone who was putting more down. So for my daughter now, I'm encouraging her to get into a home which she can have her offer accepted with minimal down, and again, you know, negotiate a 2-1 buy down to keep her payment low, and then refinance out of it. No doubt real estate is a fabulous tool for building wealth, and I think it's one of the pillars that you should have as you look to build out your portfolio, and probably the first one you should start with.
Yeah, I agree. I mean, it's if I look when I was, let's see, in 2000 I bought my first house, and had I just kept renting, that I'd have nothing right now. It's like in the appreciation I've seen, and just it's been volatile and different things happening, but hands down, it's the best thing you can do. So I'm in 100% agreement with you. Was there anything else that we didn't cover that you're feeling is like a?
I think that, you know, some people are fearful, and I think that now is a really good time to sit down with someone like myself and with you, and to really just talk about the market and explore the options. When interest rates were so low, it was very easy to be a loan officer. You kind of did the same thing over and over again, and I think that I would love the opportunity to share the tools that we do have that maybe people don't realize are an option to help the math work in this environment.
Heck yeah, I mean, it's like, it's all information, and then within discovering that, there may be the perfect scenario that just unlocks everything for people. So you're the one people need to call. I'm going to put your number below the posting here so people can reach out to you, and I certainly will as well. But
that'd be great.
Thank you so much for being here. I know this is the topic of the hour these days, especially for us agents. So thanks for shedding some light on it.
Of course, thanks for having me.
Okay. Bye. Bye, everybody.